you cannot get a mortgage when you're self-employed, or it's so hard to get a mortgage when you're self-employed. But that couldn't be further from the truth. Hello guys, welcome to my channel. I'm Eva, a mortgage professional talking all things finance. Now in today's video, we're going to be talking about mortgages for the self-employed, what you're going to need, how hard is it to actually get one, and what are the actual criteria. If you have watched a number of my previous videos, you'll know that I'm also self-employed, or shall I say newly self-employed. So all of this is very relevant to me as well, as I will eventually be looking to obviously remortgage this house and get a new mortgage on a new house. And let me tell you, the world of self-employment itself is very scary and very daunting sometimes, especially when it comes to mortgages, because everybody always tells you that you cannot get a mortgage when you're self-employed, or it's so hard to get a mortgage when you're self-employed. But that couldn't be further from the truth. So I'm here to bust the myths and tell you how it really is. So without further ado, let's jump right into the video. So I'm going to break this video down into 3 parts. First one being the documentation that you're actually going to need. I'll also include some screenshots so you know exactly what I'm talking about. The second part is the actual lender's criteria. So how much deposit are you going to need? What does your income need to look like? Etc, etc. And the third part is my tips on how to ensure that you can get a mortgage. So make sure you stick around till the end so you don't miss anything important out. So let's start off with the actual documentation that you're going to need as kind of proof of your earnings. So the main 2 things are your tax overviews, which look like this, and SA302s, or most commonly known as tax computations, which look like this. Now you're going to need those 2 regardless of whether you're a sole trader, a partner, a director of a company. It doesn't matter, you're going to need those 2 documents. Now ideally you're going to need the past 2 years. However, there are lenders that will accept just 1 year's worth of figures, but more on that a little bit later. Now if you're a director of a limited company, you will also require signed company accounts, and those accounts need to be signed by a certified accountant. Some lenders will also require business bank statements. This is more commonly known for the likes of your sole traders rather than your limited company directors. However, different lenders do have different criteria on that, so be prepared to provide 3 to 6 months worth of business bank statements. Now if for whatever reason you cannot obtain any of those documents, you will require verification from a certified accountant or a bookkeeper, and some lenders will require that regardless, so it's something worth keeping in mind. But those are pretty much the documents that you're going to require. So when you're submitting your tax return, make sure you keep all of those on file. Now if it's your accountant who does the tax returns, just simply ask them for a copy of your SA302s and your tax overviews, as they'll have them readily available. Right, okay, so let's move on to the actual lender's criteria when it comes to self-employed individuals. Now something important to bear in mind is that if you're a shareholder of a limited company and you've got more than 25% shares in that company, a lot of lenders will class you as a self-employed individual, which you should expect anyways, but if you didn't, that is something to definitely bear in mind. Other than that, your affordability is assessed in the exact same way as if you were employed. So they'll take your pre-tax income and base your affordability on that. And lenders do go off past figures, so some will simply take your last year's income, but some will take the average of the last 2 years, especially if either the current year or the previous year is obviously a lot lower than the other. Now when it comes to the deposit that you're going to require, lenders do see self-employed individuals as slightly higher risk, which in turn means that you are going to need a higher deposit. A lot of lenders will require you to put down a 15% deposit, but there are some that will accept a 10% deposit. Now if you're an individual looking to access the 5% scheme, you're very unlikely to be able to do that if you are self-employed, so be prepared to have to put down a bigger deposit. I also mentioned before about certain lenders accepting just 1 year's worth of trading figures, which is correct. However, those lenders will also most likely require you to have cash reserves to cover at least 3 months worth of mortgage repayments. So on top of your deposit, you're going to need that extra cash to prove to them that if you have no income coming in for 3 months, you can still manage the mortgage payments. So cash is key in this one. Now let's move on to my top tips for the self-employed. As a self-employed individual, obviously we look to pay as little tax as possible. It's no secret. However, if you are looking for a mortgage, you need to ensure that your figures add up. Now the main difference between being employed and being self-employed is that when you're employed, you simply take your salary, you times it by about 4 or 4.5 times to get your basic affordability, to get your basic amount that you can actually borrow. However, when you're self-employed, you almost have to work backwards. You take the amount that you need for the mortgage and then divide that by about 4 or 4.5 to actually get the income that you're going to need in order to be able to service that mortgage. Now this obviously doesn't take into account, you know, any debt or anything like that, so it's only a rough, vague idea of what you're going to need. However, it's the whole working backwards. So if you do those calculations and you need 40 grand worth of income, you need to make sure your tax returns say 40 grand or more in order to be able to get that mortgage. So my best tip here is that if you're looking to get a mortgage in the near future, make sure your latest 2 years worth of figures are spot on. And it will mean having to pay more tax, but so be it. Remember, lenders look at the pre-tax income, so that really needs to be at the level that you need it to be. And be careful when it comes to accountants. They do a fantastic job, don't get me wrong, and they'll obviously try and get you to pay as little tax as possible. However, if you are looking for a mortgage, you need to make them aware of that, because they need to take that into account when doing the different calculations and planning your tax bills, because you're going to need a higher income, which could mean offsetting less expenses. So always speak to your accountant and make sure they're also on board with this. Now the second top tip is to always be prepared to pay a higher deposit. So make sure you've got that cash saved up. So it could be that you're only going to need a 10% deposit, but if you've got 15% saved up, it opens up a lot more doors, as you'll be able to choose products from a bigger range of lenders. And when saving up for a deposit, make sure you watch one of my recent videos when I talk about the acceptable sources of deposit, as you'll need to evidence where obviously the money came from, and ideally you just want it to be your savings. And my final tip, and you're probably going to be expecting this, is to speak to an independent mortgage advisor, especially one that has vast experience and knowledge of dealing with self-employed individuals, as they'll be able to walk you through the process and pick out the best deal for you, and also realistically tell you what your chances are of obtaining a mortgage with your current income. So, you know, feel free to get in touch with us. Our contact details are just in the description box down below. And that is it for today's video, guys. I hope you found it useful, and if you did, make sure you hit that like button and also subscribe to my channel for more finance and mortgage content. If you are self-employed and if you have recently applied for a mortgage, or you have in the past, let me know your experience in the comment section down below, as I always find it really interesting to hear about people's experiences. As always, if you have any further questions, please pop them in the comment section down below, or alternatively contact me directly via email. Thank you for watching, and I'll see you guys back on Friday with a brand new video. Bye guys.